Okay, I'm Dan Fitzpatrick here, stockmarketmentor.com, and I want to look at Sportradar today. This is why we got in this stock back here when this thing first broke out of this squeeze, and this was really a textbook volatility squeeze. It's really what you like to see, a big kind of a shakeout here on this day, almost twice average volume, but then the stock on the following day just kept started running higher. Volume was increasing, and then it really breaks out on this day. So okay. That is a really good time to be buying. And then the very next day, it pulls back. Now, this is where stops come into play. You want to make sure when you're putting on your trade, you have defined exactly what your risk is, what your acceptable risk is. On Trade Track, I actually have a risk calculator that allows you to set this like to the penny, to the precise number of shares you're buying. So you need to be doing that, whether you're using Trade Track or a flipping SR15. That's an old calculator. Anyway, it doesn't matter. But the bottom line is we set our stop. It was low enough to where this little pullback, this little test of the breakout did not stop us out. And then, by the way, then the following day and even this day, if let's say you did get shaken out back here, like you put your stop really tight, when the stock does this type of thing, you say, okay, this could be a new trade. I could buy this stock here and keep a stop just below this day's intraday low. So I'm risking about 3%. This would have been like a pullback buy. We didn't get shaken out, so we didn't have that luxury. And so now the stock breaks out, and here it is. It keeps running. The most important thing to be mindful of is, like, where is this stock on this kind of a move relative to the 8-day exponential moving average? It came down today and had a cup of coffee there real quick, a small one, and then it runs up higher, closes really nicely over 3% just today. So you look at the weekly chart and you see the all-time high here was during the first week of trading at 28.22. So this traded today at 28.14. All right. Does it really matter? Do we really care? No. Anything that goes back this far, like on an IPO, this is the high pi, the enthusiasm high. Right away, this thing traded down, as a lot of them do, lost 3/4 of its market cap, and then has gradually been fighting its way back. Nobody who's long this stock here gives a rip about what's happened here. There's probably, unless somebody's fallen into a coma for a few years, nobody who bought on this day is still holding, just waiting to get their money back. So all of this stuff doesn't matter. What does matter is this kind of trend. This is just getting started. I think I'm not actually going out on a limb here and saying I think this thing can have $30 before this really finds any resistance. It's really on a point basis, it's $2 a share, but on a percentage basis, it's about 7%. So that's really what we're looking at right here. I have my stop now set at break even in at 25.18. Now the stop is at 25.18. So I'm kind of free riding on this right now. There's no way, unless there's some goofy gap, but so there's no way to take a loss here. So now it's just, okay, well, how much money am I going to make? And by the way, the stock's up here. If this falls back to take me out at 25.18, this is a bad trade, because you should not let a stock pull back 10% before you get stopped out. You're giving up all of your profits, and you're not giving up 10% of them. You're buying the stock here. The stock's trading up here. Okay, that's 11% profit. So if the stock pulls back, you're not giving up 11%, you're giving up 100%. You're losing everything. So don't do that. Always be mindful that math matters. Charts should control your actions. Math should control how you're actually seeing and how you're doing, how you're making the decisions that you're making. So always focus on the math. We do. And by the way, probably next week, in fact, definitely next week, I'll be sending out an email with some stats as far as what we've been doing at Stock Market Mentor on the trade side. Because, and by the way, if you're a member, you know this already. But if you're not a member, I think it's important for you to see people are making some real money here. And I want you to be a part of it. You may, I'll just tell you, we're going to be raising prices pretty soon. So you may kind of want to hop on the bandwagon now if you're thinking about it. If you're not, that's okay, because you can get on later and it's not going to be that much more. But anyway, so just letting you know, if you're into this stuff at all, if you want to learn to trade very well, profitably, but also consistently develop this one method that works, then join me. And if you don't, that's okay too, okay? Making money isn't for everybody.